Hi, this is Lara at Elliott Wave Gold with your end of the week US soil analysis. After the soil analysis, I'll be also adding on gold analysis and then the S&P 500. This Lara's weekly analysis is an end of week Elliott Wave and technical analysis for those three markets. It focuses on the mid to long term picture for swing traders and longer term investors. At this time, it's available to the general public, but in the near future, it may be available by subscription only. And when I launch it as a subscription-only product, I'll be offering a once-in-a-lifetime grandfather rate. And so if you want to be notified when that subscription is launched, and if you want to lock in your grandfather rate for the lifetime of your subscription, go to the website. I'll put the link down below on YouTube and give us your email address by the Notify Me button, and we'll let you know when that's available. Okay, US oil analysis. Overall, the outlook remains bearish while price remains below 66.65. For the very short term, I'm looking for a little bounce to end at least a little above 63.28. A possible target is at 65.05, and when that's done, I'm looking for the continuation of a downward trend. Let's do Elliott Wave analysis first, classic technical analysis last. At the monthly chart level, I have two wave counts. This first wave count expects that the bear market for oil is not over. It has a better fit in terms of Elliott Wave. It looks at a zigzag unfolding downward for a super cycle degree second wave, with a cycle wave A here, B a zigzag complete, and C continuing as a five wave impulse, subdividing 1, 2, 3, 4, 5. 5 down to complete, very likely to move at least slightly below the end of 3 to avoid a truncation. The target for primary 5 is for it to reach 0.618, the length of primary 3. If we see cycle B over at the high here, then cycle C would be incomplete. Well, you could try and see it as over from this high to this low, but it just wouldn't have a very good five-wave structure look. If we see primary 2 over here and primary 4 over here, they have really good proportion. Primary 2 lasting 22 months and primary 4 lasting 23 months. Often, not always, but often it's the proportion between the second and fourth waves within an impulse that give what we call the wave count the right look. And that proportion is most often in terms of duration, but sometimes one of them can be longer lasting and the other one can be quicker but move a great distance in terms of price and give the wave count still good proportion. Primary 4, if it continues, may not move into primary 1 price territory above 74.96. That's a final differentiation between this bearish wave count and my alternate bullish wave count. Any movement by any amount at any time frame, even intra-minute by any amount, is enough to invalidate this wave count and confirm the more bullish wave count. That's one of the nice things about Elliott Wave. These invalidations, or rather the Elliott Wave rules, give us a nice clear guideline as to which wave count may be correct, and at least which wave counts are wrong. And when you eliminate the ones that are wrong, what you've got left with is most likely to be right if you've got your rules right. There's a lack of alternation here, though, between primary waves 2 and 4. They're both zigzags. We don't always see alternation in structure. Alternation is a guideline, not a rule. It's not always met. It doesn't have to be met. Otherwise, obviously, it would be a rule, but it's not a rule. Here, there is some alternation in terms of depth. Primary 2 is very, very deep at 0.94, the length of primary 1, and primary 4 relatively shallow at 0.47, the length of primary 3. So there is some alternation. Let's take a look at the structure of primary 4 at the weekly chart level, where the low for primary 3 is this point down here. It subdivides quite nicely as a zigzag, subdividing 5, 3, 5. This B wave is a 5-wave triangle, but it's a corrective structure. B waves can be any corrective structure. And C, beginning here, subdivides nicely as a 5-wave impulse. This Elliott channel around the zigzag of primary 4 is going to be very, very important. The lower edge is nicely showing where price found support down here. If we get back down here in the first instance, I would expect it's very likely we may see a bounce. If we don't see a bounce here and price slices through, I'd look for a throwback to resistance at the lower edge of that channel. A breach of this channel would be a very strong indication that this zigzag of primary 4 should be over, and primary 5 at that stage should be underway. If that happens, I will have substantial confidence in this wave count. While price remains within this channel and the bullish wave count remains valid, we won't have that level of confidence at this stage. Let's take a look at the daily chart level where the end of intermediate wave B is this point down here. Here's intermediate wave C, fits really nicely in a best fit channel, which was clearly breached, sliced through as price broke through with the lower edge of that channel, a bounce to find resistance at the lower edge of that channel. That's what I was talking about with that big black channel on the weekly chart. This is really typical behavior from price. Minor wave 2 here may be continuing sideways as a double combination. It may be incomplete. A zigzag for the first structure, and the double is labelled minute wave W. The double is joined by a 3 in the opposite direction labelled X, which subdivides as an expanded flat. And here we may have another expanded flat for the structure of minute Y, subdividing 335. Minuet C very likely to move beyond the end of A to avoid a truncation, and that target, I think it was 65.05, would be where minuet C would reach 1.618, the length of minuet A. Friday's session was a fairly strong bullish day, so I'd expect at least a little bit more upward movement after that, so very likely to move at least slightly above this high here. As soon as that happens, then the structure of minor wave 2 in its entirety could again be complete. Look out for an end to it, and then a downward wave to show an increase in strength and momentum to the downside for a third wave. Along the way down, if we get a new low below 55.24, we'll have substantial confidence in this wave count because the bullish alternate would then be invalidated. To the upside, minor 2 may not move beyond the start of 1 above 66.65. At the monthly chart level, this is a very bullish wave count, still seeing a zigzag beginning here, but it could be complete, subdividing 535. The difference from this alternate and the main wave count is where I'm seeing cycle wave B ending. The main wave count sees cycle B over here at the high. This alternate sees cycle wave B over here at this lower high. This is possible, and cycle B will still fit as a zigzag subdividing 535 with an unusual 9-wave triangle for primary B within it. That's okay. It meets all the rules. It certainly is nicely contained within the triangle trend lines. A triangle could have been over here. Primary C is not technically truncated because it has moved substantially above the end of primary A. The term truncation, when we refer to C and fifth waves, refers to where the C and fifth wave ends in relation to the A or third wave before it, not to where it ends in relation to the correction that came right before it. Primary C doesn't have to move above the price territory of primary B to avoid a truncation. It could have ended here. This primary B is a running contracting triangle. If primary C begins here, then quite importantly, it subdivides very nicely as a 5-wave impulse. It certainly could have been over at this low. There's some problems though within the subdivisions of the start of this new upward trend, but if this wave count is correct, then we would be expecting the oil is in the early stages, still at relatively very, very low prices of a very strong new bull market. Supercycle 3 must move above the end of Supercycle 1, above 146.73. In fact, it must move far enough above that point to allow subsequent room for Supercycle 4 to unfold and what's remain above first wave price territory. If we see a new high by any amount at any time frame above 74.96, then I would have reasonable confidence in this very bullish wave count. To the downside, when cycle 1 is complete within the new bull market, then the next correction for cycle 2 may not move beyond the start of 1, below 26.06. What about how it subdivides at the weekly chart level? Let's look at the biggest problem for this wave count and the reason why in Elliott wave terms it's my alternate from this low here, this point here. This is okay. We could have had an impulse for primary 1, quick zigzag for primary 2. Primary 3 could have begun here, but here's the problem. We would have to see from this low to this high a 5-wave structure complete for intermediate wave 1, and this does not look like a 5. This movement looks like a 3. Now we can force it to subdivide as a 5, but it really does seem to be pushing it. This movement here subdivides better for the main wave count than it does for this alternate. A double zigzag down for intermediate 2 has not moved beyond the start of 1. All rules are met for this wave count. An impulse for intermediate 3 may be over here. Intermediate 4 may not move into wave 1 price territory below 55.24. So that's why a new low by any amount at any time frame will invalidate this alternate at the weekly chart level and provide some reasonable level of confidence for that main wave count. Okay, what about classic analysis? Quickly over the monthly chart, because it hasn't changed, because the month of February ended before I did the last analysis of the monthly chart. A little bit concerning that we don't have a candlestick reversal pattern at this high. Not only that, but we have a bullish long lower wick for the month of February. The month of February saw a balance of volume down, and it saw a decline in volume overall for the month. So there wasn't as much support for downward movement within this month as there was for upward movement in the prior month. So at the monthly chart level, the short-term volume profile is bullish, also slight cause for concern for the main wave count. Friday's session was a strong bullish day, but it doesn't have support from volume. The volume profile for this piece of movement still remains overall bearish. There is more support for downward days than there is for upward. Price is range bound here with support about 58 and for resistance final about 64.90. And during this range bound movement, it's downward days which have strongest volume, suggesting a downward breakout may be more likely than upward. Now that trick doesn't always work, because technical analysis, all of it, including Elliott wave, is all a balance of probability, not an exercise in certainty. It doesn't always work, it just works more often than it fails. So that short-term volume profile supports the main Elliott wave count. ADX reached very extreme for the prior upward trend. For oil's trends, ADX can remain very extreme for a long period of time. It got very, very extreme. The consolidation's pulling ADX down from extreme. The positive and negative DX lines are whipsawing. This is telling us at this stage there's no clear trend and price is range bound. On balance volume is a range bound within a new range. Now neither this resistance nor support line offer good technical significance because they're only just able to be drawn. They've only got 2 points of reference, the minimum requirement to draw a line. But there is a new range for on balance volume, and so watch this one really carefully next week. I think this is the indicator to watch. If we see a break above resistance, look out for an upward breakout from this consolidation. If we see a break below support, which is what I'm expecting is more likely, look out for a downward breakout from this consolidation. Watch that one really carefully. RSI is neutral. There is plenty of room for price to rise or fall, as is stochastics, and Bollinger Bands are contracting as price moves sideways, very typical during a consolidation. For Friday's session, price moved higher with a higher high and a higher low, but it didn't come with a normal corresponding decline in market volatility. Volatility hasn't made a lower low beyond the prior day, and so I'm reading this as a bearish signal. The rise in price has inherent weakness. It didn't come with a normal decline in volatility, so that supports more downward movement, which actually for the short-term expectations does not support the Elliott wave count for the short term, but for the mid-term it does. I'll be expecting overall a continuation of an upward swing next week. The target at 1391 is still the same, but again it might be too high because there's strong resistance to overcome before that target could be met. Elliott wave analysis first, classic analysis last. I have 5 wave counts that I've published for members at the weekly chart level in order to make the analysis possible for me to do and digestible and understandable for you to read. I'm only going to publish 2 weekly charts. So at the beginning of every analysis, I link back to that historic analysis where I go over all 5 of the different options I can see at the weekly chart level. I'm going to publish 1 bullish and 1 bearish, and this is one of the more likely wave counts I expect. My wave counts see a cycle degree A wave complete here and a cycle degree B wave beginning here. There are more than 23 possible corrective structures that B waves can take, and that's one of the reasons why there are so many alternate wave counts at this time. This first wave count looks at cycle wave B as a single zigzag, which would subdivide 5, 3, 5. Primary wave C upward must be a 5-wave structure. It can only either be an impulse or an ending diagonal, and all of this choppy overlapping quite strongly suggests a diagonal. If the diagonal begins here, and if we see intermediate waves 1 and 2 over here, then the diagonal would be expanding. intermediate wave 3 is longer than 1, intermediate wave 4 is longer than 2, and so intermediate wave 5 needs to be longer than 3. It will reach equality in length with 3 at 1398.41, and so it needs to end above this price point in order for the rule regarding the wavelength for the fifth wave of the diagonal to be met. Within an ending diagonal, all of the subwaves must be zigzags, hence we have a labelling of a zigzag for 1. We can't see the labels in here. The B wave was over just within 2 days. It doesn't show up at the weekly chart level, but intermediate 2 does subdivide as a zigzag. Intermediate 3 is a zigzag, as is intermediate 4, and intermediate 5 needs to be a zigzag. And so within it, the subdivisions should be 5, 3, 5. And minor B may not move beyond the start of A below 1236.54, but it shouldn't get very close to that point, because if it were to be very deep, it should not break below support at the lower edge of this 2-4 diagonal trend line, because diagonals very, very commonly adhere very well to their trend lines. We've got a couple of little overshoots here and here. That's slightly unusual, but not too much. Price quickly returned back within resistance and back above support here, and so the trend lines are just overshot. They're not actually properly breached. They're reasonably well showing where price is finding resistance and support. So if minor B gets to be that deep, expect pretty good support about the 2-4 trend line. Within this ending diagonal, here minor B shows up at the weekly chart level. It doesn't within intermediate 2. Intermediate 3 is longer than 1, and so it takes longer in terms of time as well as price. And minor wave B within it is a fairly long-lasting structure. Within intermediate wave 4, this also moves further in price and takes longer in time than intermediate 2, because the diagonal is expanding. And so because the diagonal is expanding, let's expect intermediate 5 is not only going to be longer in price, but also in time than intermediate wave 3, which means minor wave B within it may very well be longer in terms of time than minor B within intermediate wave 3. I hope that makes sense. Okay, let's take a look now at this zigzag of intermediate 5, where the end of intermediate 4 is the slow down here. Intermediate 5 so far, a zigzag subdividing 5, 3, 5. There are still multiple structural possibilities for minor wave B, and this first option outlined by these arrows on the daily chart is an expanded flat, because that's one of the most common structures it may be. That does not mean that this is how it has to unfold, and so it doesn't mean that minor B has to follow the pathway that I'm showing by these arrows. This is just one structural possibility of quite a few options left open. If minor B is a flat, then we have a 3, incomplete 3, and then we'd expect a 5 down. Minor B could also still be a triangle if we see its A wave over here. We could be seeing a sideways moving in an ever-decreasing range, choppy overlapping movement for quite a few weeks yet, if it's unfolding as a triangle. It could also be a combination with the first structure in the double combination, a zigzag labelled minute W, joined by an incomplete 3 labelled X in the opposite direction, and then we could have a flat correction or a triangle for minute wave Y if minor B is going to be a double combination. When those structural possibilities differ substantially in terms of direction, then I'll start to separate them out into different daily charts. But for now, let's expect sideways movement in this range to swing from resistance to support and back again. And then when it's done, we'll expect a breakout in the end of minor wave B. Within minor wave B, if we have a 3 down complete here, we're now looking at a 3 up unfolding, and minute wave B looks quite strongly now like an expanded flat correction, subdividing 3, 3, 5. So I'm expecting a 5 up now for minuet C to most likely reach 1.618 times the length of minuet A. That's why my target is at 1391. But there's pretty strong resistance up here to be overcome before this target could be met. At the weekly chart level, this is a very bearish wave count. This is the most bearish wave count of my 5 weekly charts I've published, which is why I'm publishing it every day so that we can look at a very bearish possible scenario. Still seeing cycle degree wave A over here and cycle degree wave B beginning here, but here cycle B may be unfolding as a flat correction, subdividing 3, incomplete 3, and they would need a big 5 up. Within the flat, primary wave B must reach a minimum requirement of 90% the length of primary A to meet the rule regarding a B wave for a flat that would be met at or below 1079.13. The flat may be an expanded flat where primary B can move beyond the start of A, and in fact that would be fairly likely for this wave count because expanded flats are the most common type of flat correction. The target would see it do that. Primary B itself is seen as a regular flat correction subdividing 3, 3, 5. It's a regular flat because intermediate wave B it's longer than 0.9 the length of intermediate A, so it's met the minimum requirement for a B wave within a flat, but it's less than 1.05 the length of intermediate A, which is the requirement for an expanded flat, so it's within that range. It's 0.96 times the length of intermediate A, so this is a regular flat. But the target for intermediate C is not equality in length with intermediate A. The target is 1.618 the length of intermediate A, so that this minimum requirement for primary B is met. The target is at 958. The only problem with this wave count is there's a very rare triple zigzag in my now 10 years of daily Elliott wave analysis. In all of that time, I've only seen 2 triple zigzags before. If this wave count is correct, it would be the third. That's how rare they are. When primary wave B is complete with a big 5 wave structure down, then we'd be expecting a big bull market for gold with a big primary wave C up to move well beyond the end of A. Let's look at some classic analysis now and have a look and see what direction I expect price to move next week. At the weekly chart level, gold is in a big consolidation that began back about here, but it's got a series of higher highs and so far higher lows. So that's the definition of an upward trend. So it's mostly a consolidation, but it has an upward bias. At the weekly chart level, ADX tells us at this stage the market is not trending, it's most likely consolidating. And so price is swinging from resistance to support and back again, and within this upward bias overlapping choppy movement, we've got a smaller consolidation that's developed here with resistance about 1375 and support about 1305 to 1310. As price is moving essentially sideways within this little range, overall volume is declining. For this week, it's an inside week. It didn't manage to make a new high. It's completed as a doji, so it represents indecision, a balance of bulls and bears. We've got a decline in volume for the balance of volume during the week upwards, so that would be a little bit bearish, but we've got a bullish signal from on-balance volume. I'm going to give this bullish signal more weight than I am going to give weight to the slight decline in volume for the week. With this bullish signal here and price bouncing up off support, let's expect overall an upward swing up to resistance about 1375. That seems to be a reasonable expectation. As I said, ADX is declining, telling us the market's not currently trending. ATR has been in a long, steady decline for years now. Might be starting to show a little bit of an increase. We were hopeful back here it might have, but it turned out that it wasn't. If it continues to show an increase, then hopefully that low volatility environment is over. But that absolutely fits a B wave, which my wave counts, almost all of them, see as gold within a big cycle degree B wave. That's very typical behaviour for a B wave. RSI is neutral, telling us there is plenty of room at the weekly chart level for price to rise or fall. Stochastics returning from overbought, didn't reach oversold, but price here did reach a short-term support, but we certainly could see a further fall in price before stochastics reaches oversold, and so it's entirely possible that price could fall back down to the support level down here. What about the short-term picture? I've zoomed out here to have a look at the bigger picture for gold. Gold has been in a huge big consolidation since just a little bit further off to the left of the chart, swinging between resistance and support and back again with smaller consolidations within this big chop. During this huge big consolidation, it is 2 upward days here and here which have strongest volume, and let's go back to the weekly chart. It's an upward week which has strongest volume here, and there's another strong upward volume week here, but it's this upward week here which has strongest volume. That's a nice trick. Look at a consolidation and figure out which direction has stronger volume, upward or downward, tells us in which direction there is more pressure, and so which direction we are more likely to see a breakout. The trick does not always work, but it does work more often than it fails, and so I'll be expecting possibly an upward breakout from this huge consolidation. That would tend to favour the first wave count that I went through with you. This last week made a lower high and a lower low, but the balance of volume was upward, and we see a little bit of a support for the week for upward movement. And so that would support the idea that we're going to see upward movement from the short-term Elliott wave count. On balance volume at the daily chart level is constrained. I'll be watching this carefully. If we get a break above resistance, that would be a reasonable bullish signal. A break below support would be a weak bearish signal. ADX at the daily chart level is strongly declining, and the DX lines are whipsawing. It's telling us that price is most likely consolidating at the daily and weekly chart levels at this stage for gold. There is no clear trend. ATR is flattening off, also normal for a consolidation. RSI neutral and stochastics neutral, both of them. RSI here, stochastics here, plenty of room for price to rise or fall. So stochastics reached oversold at the daily chart level, and price reached down very slightly below support. Price is now bouncing up. Let's expect a swing up to resistance about 1360, final resistance at 1375. Let's expect stochastics to move up into overbought. And so I'm expecting overall the continuation of an upward swing that's supported by Friday's volume increase, supporting upward movement within the session. But here's the thing, when price is consolidating, it does not move in straight lines, so do not expect it to. It is choppy, it is overlapping. So we'll expect a choppy, overlapping, generally trending upward movement probably for another couple of weeks or so, and we won't expect that swing to end until price reaches resistance and stochastics reaches overbought. I have some reasonable confidence and expectations of more upward movement next week. I have two targets, either 2869 or 3006 for the short term. Along the way up, if price makes a new all-time high, and at that time we have a bullish signal from on-balance volume or the AD line, or there's some reasonable support for upward movement from volume, then it would be possible that the pullback was over on the 9th of February and the bull market resumed at that point. But if we see a new all-time high and we see some weakness in upward movement, then it may be a B wave and doomed to full retracement. Let's have a look at the Elliott wave analysis first, classic analysis last. My Elliott wave count expects a fourth wave at cycle degree ended here, and a fifth wave at cycle degree here began, unfolding as an impulse. So far within the impulse of cycle 5, we have 1, 2, 1, 2, 3, 4 may be continuing, but it could have been over here. When it's done, we'll have 5 to complete primary 3, another big fourth wave correction at primary degree, and then another final fifth wave up toward one of these final targets. The first target is looking too low. Cycle wave 5 passed equality in length with cycle 1 at 2,500, and that would have been the most common Fibonacci ratio for the fifth wave to exhibit, but it didn't end there. It's extending, which it can do. Cycle 1 was not extended, cycle 3 was a long extension. 2 of the 3 actionary waves may be extended, and in this case it looks like both cycle 3 and 5 are extending. The next Fibonacci ratio in the sequence is where cycle 5 would reach 1.618 the length of cycle 1. That would be at 2926, but it looks like that's not going to allow enough room for the upward structure to unfold. And so the second target may be more likely, where cycle 5 would reach 2.618 the length of cycle 1 at 3616. I'm drawing this Elliott channel using Elliott's second technique as if intermediate 4 was over here, from the end of intermediate 2 to this low, then putting a parallel copy up on the high of intermediate 3. I have an alternate wave count which looks at the possibility that intermediate 4 was over here, and I also have 3 wave counts now at the daily chart level, looking at the possibility that intermediate 4 is continuing further as one of 3 different structural possibilities. We should expect intermediate 4 to exhibit some alternation with intermediate 2, which was a deep double zigzag, and it's fairly likely that intermediate 4 may exhibit reasonable proportion to intermediate 2, Intermediate 2 lasted 11 weeks. Let's expect if it wasn't over here, intermediate 4 may last a Fibonacci 13 or possibly even 21 weeks. It's also possible that intermediate 4 was over here, even though it may have been over in just 2 weeks. The amount of distance in terms of price travelled would still give it a reasonable proportion to intermediate wave 2, even though they would be of very different durations. One would be much, much longer lasting. That's okay in this instance because if intermediate 4 was over here, it travelled so far, even though it was very quick. If it's continuing further, it may not move into wave 1 price territory below 2193.81, but I wouldn't expect it to get anywhere near that point. If it were to be very deep, which I think is quite unlikely, but if it were to be reasonably deep, then it would be expected to find really strong support at the lower edge of this maroon trend line. It's been overshot at the end of cycle 4, and since then it's price is finding support above this trend line. Let's take a look at the first of 3 structural options for intermediate 4, where intermediate 3 high here is this point here. This is my preferred wave count for intermediate wave 4 because it would expect price to continue to find strong support at the 200-day moving average, which is pretty much where this pullback bounced up strongly. This first wave count looks at the possibility of a contracting or barrier triangle for intermediate wave 4, which would see minor wave B within the triangle incomplete. We would have a zigzag for A, a zigzag up for B incomplete. When it's done, I'd then expect a single or double zigzag down for C, quite likely actually a double zigzag, and then a zigzag for D and a final zigzag down for E. An Elliott wave triangle is analogous to a symmetrical triangle, or, in this case, if it's a barrier triangle in Elliott wave terms, an ascending triangle in classic pattern analysis. If this is a contracting Elliott wave triangle, analogous to a symmetrical triangle or a coil, then B may move beyond the start of A. It may make a new all-time high, but then C can't move beyond the end of A, D may not move beyond the end of B, and E may not move beyond the end of C. So choppy overlapping movement in an ever-decreasing range. 4 of the 5 subwaves of an Elliott wave triangle must subdivide as simple ABC structures. They must be zigzags. 4 of the 5 subwaves must be zigzags, and 1 of the 5 subwaves may be a more complicated multiple, usually a double zigzag. The most common triangle subwave to be a double zigzag is the C wave, so that's what I'd be expecting. It's also possible that intermediate 4 could be a barrier triangle, where B can still make a new price extreme beyond the start of A as in a running triangle. C still can't move beyond the end of A, below 2532.69. A barrier triangle would see D end about the same level as B, so that the BD trend line would remain essentially flat, and that's why I say it's analogous to an ascending triangle in classic pattern analysis. It looks the same, just the Elliott wave rules for these structures are a bit more prescriptive and actually quite clear. When D is over, then we'd expect a final zigzag down for E. A triangle for intermediate wave 4 could total possibly a Fibonacci 21 weeks. Of all of the corrective structures, triangles are the most time-consuming, most frustrating to trade, and one of the most difficult to analyse. My target for now is for minute wave C here to reach equality in length with minute wave A, about 2869. Let's have a look at the next structural option for intermediate 4, where the high of 3 is the same point here, and now I'm looking at intermediate 4 as possibly a double combination. The first structure in the double, a complete zigzag labelled minute wave W. The double may be joined by a 3 in the opposite direction labelled X, which would be incomplete. The target is the same, a zigzag up 535, still expected to complete. When X is over, then I'd be expecting a second corrective structure to be labelled minor wave Y, which may be either a flat or a triangle, and actually would be much, much more likely to be a flat than a triangle, because by quite a wide margin, the most common combination in a double combination is a zigzag and a flat. The purpose of double combinations is to take up time and move price sideways. They are big, range-bound, choppy, overlapping consolidations. they are equivalent sometimes to flag patterns in classic pattern analysis. To achieve that big sideways look, the X wave of double combinations is usually very deep and there's no upper invalidation point. X waves of combinations may make new price extremes beyond the start of the first or second structure in the double combination, or triple if there is one. And so minor X could make a new all-time high above this price point, and this wave count will remain valid. The second structure in the double combination would be expected to end about the same level as the first, somewhere close to 2532.69, so that it achieves its purpose of a big overlapping sideways movement and just takes up time and moves price sideways. The invalidation point's the same as at the weekly chart level. And so this wave count could continue to see intermediate wave 4 complete in a total Fibonacci 13 weeks, or also possibly a Fibonacci 21. I think it's a little bit less likely than the first wave count though, because were minor wave Y to end about the same level as minor W, it would need quite a big overshoot of the 200-day moving average, and that is where price is finding pretty strong support. I think it's much more likely price, if the bull market continues, and I think it will for a while, much more likely price will find good support at that 200-day moving average. And the last option, same high here, intermediate 3 still over here, is a possible flat correction from intermediate wave 4. Flat correction, subdivide 3, 3, 5, would still be expecting minor wave B up to be completing. It would still need to meet the minimum requirement of a 90% correction of minor wave A to meet the minimum requirement for a B wave within a flat. It could be any corrective structure. It may be unfolding as a single zigzag subdividing 5, 3, 5. And when it's complete, we'd then expect a big 5-wave structure down for minor C to be very, very likely to make at least a slight new low below the end of minor A to avoid a truncation, and if this is an expanded flat, the most common type, to make a substantial new low below the end of minor wave A. And again, as I said on the last chart, that would require a substantial breach of the 200-day moving average. I think that's unlikely. So I think a triangle possibility for intermediate 4 is the most likely at this stage. At the daily chart level, this is my alternate wave count. This is entirely viable. As I said, at the weekly chart level, even though it may have only lasted 2 weeks, it's possible that intermediate 4 could have been over at this low, even though it would have been much, much more brief than intermediate 2 because it travelled such a great distance proportionally at the weekly chart level and the monthly as well. They do look okay. It gives the wave count still the right look at higher time frames. And so it's possible the pullback was over here and the bull market is resuming, and we're still at relatively low prices for an ongoing bull market. Intermediate 5 may be unfolding as an impulse. So far we may have minor 1, an expanded flat for minor 2, minor 3 incomplete. The target is for it to reach 1.618, the length of minor 1, at 3006. Within minor 3, no second wave correction may move beyond the start of its first wave below 2647.32. If we see new all-time highs and it comes with a bullish signal from on-balance volume or bullish divergence with the AD line, a bullish signal from the AD line, or bullish signals with strong support from volume for upward movement, any of that reasonable bullishness would see this, the main wave count, and the continuation of intermediate 4, one of those first 3, would be alternate ideas. So I'm going to be judging the strength of upward movement to differentiate this more bullish idea from the more bearish first 3 wave counts. How much support do we have for this idea? We've got some strong bullish signals this week, which is quite exciting really. At the weekly chart level, we've got an outside week. I'm not going to read this as a bullish engulfing candlestick because it's not coming after a downward movement. For a candlestick reversal pattern to be read as such, it has to have something to reverse. So a bullish reversal pattern needs to come after a downward trend. This is not coming after a downward trend, but it is still a strong bullish candlestick. There is a less support for this week where the balance of volume is upward than there is for the prior week where the balance of volume was downward. I'm not going to give too much weight to that lack of support from volume in this week's analysis though, because I have noted repeatedly that for some years now in this market, price has been rising on relatively light and often declining volume for years. It seems to be drifting higher due to a lack of resistance rather than support from buyers. What that means is it can certainly continue to do so. It can continue to do so for years yet. But what it means, I think, is eventually when the bull market ends, and it will end one day, when it ends, there is very little support below, and the resulting bear market could move very, very far, very, very fast. But we're not there yet. On balance volume is reasonably bullish, but it isn't giving a new bullish signal here. There's quite a bit of distance to go before it finds support at the last support line. RSI is neutral. There is plenty of room for price to rise or fall. ADX still declining, telling us at this time frame there's no clear trend at this stage, and MACD still bearish. It's a lagging indicator. This pullback has managed to bring ADX down from very, very extreme and RSI down from extremely overbought. And so now there is again plenty of room for a new trend to develop. What about the shorter term picture at the daily chart level? We've got a strong bullish candlestick pattern for Friday. This gap, I'm going to read this as a measuring gap until proven otherwise. And if that's correct, then the distance of this movement added to the base after the gap gives us a target about 2845 for the next wave upward. There's a little bit of support from Friday's upward movement from volume, so that's bullish. Importantly, we've got a bullish signal from on balance volume. It's broken above resistance, but the stronger bullish signal is coming from a new high from on balance volume. I'm going to read on balance volume as a leading indicator. And so this is a bullish signal, a very strong bullish signal from on balance volume that might tend to suggest that that alternate Elliott wave count might actually be more likely. So please do be aware of that possibility. ADX has been declining for quite some time after telling us that we had an extreme upward trend for a very short period of time. It's a lagging indicator. It did tell us that there was a downward trend, but it's now been pulled well down from extreme, and now finally the DX lines are just crossing, with the positive crossing above the negative. It tells us after Friday's upward session that we may have a potential trend change back to up, and if the ADX line now turns around and rises, that would be a strong bullish signal from ADX. ATR is remaining overall flat now as price rises. That's okay. Again, flat and low ATR has long been a feature of this market, but at least it's at a higher level now. Some volatility has returned. That's really good to see. Makes trading a little bit more profitable. RSI is neutral again. There's plenty of room for price to rise or fall. Stochastics also still neutral. Plenty of room for price to rise or fall. MACD bullish at this stage. Bollinger Bands contracting as price rises. Again, that's been a feature of this bull market, contracting or steady Bollinger Bands, apart from toward the end when they widened quite strongly. And price can sit around the upper edge of Bollinger Bands for many days in a row. So don't expect just because it gets up there that we have to see a pullback. That's absolutely not the case in current market conditions. What about VIX and the AD line? Because we've got some nice bullish signals here. We've got a new swing high from inverted VIX here, yet price has not quite made a corresponding new swing high. And so the rise in price, I'm going to read inverted VIX as a leading indicator. And so that tells us that we should expect price to follow through. This is a bullish signal from inverted VIX. And the same with the AD line. We had a bullish signal here, and we've got another bullish signal here. The AD line has made a new high above this price swing high. Price has not quite yet managed to make a corresponding new high. The rise in price has strong support from rising market breadth. With the AD line being read as a leading indicator, this is a reasonable bullish signal. And that, in conjunction with that bullish signal from on-balance volume, gives me reasonable confidence in expecting more upward movement next week. That's all from me. I hope that all of our members and viewers are having a fabulous weekend.